What is up, everybody? Cameron Fous here with Fous Sport Trading. Today, we're going to go over the trade short on MICT. So, I just want to talk about a couple things first that you need to understand to be able to understand not only the logic behind this trade, but also how to do it. So, first thing you're going to need is the knowledge of how to short, and we do teach how to short in our upcoming product, or maybe if you're watching this at a later time, it's already out. Fous for Part 3, the dark side of trading. This is going to teach you our entire strategy behind shorting stocks. So if you look at my profit here on MICT, I made 1,800 bucks. I don't know if you can see this. Let's zoom in a little bit. Realized gain of 25.70 on both these trades here for MICT and MBRX. Both of these stocks were short, trading very similar patterns. So I'm going to go over that. So in Fous for Part 3, we teach you everything you need to know about how to short and actually identify the patterns. But you guys, understanding patterns is the easy part, okay? Learning what a chart pattern looks like, who cares? That's grade school stuff. Really being able to execute the profits or execute the buy and sells when you need to, that's 100% mental, and that's where Cloud9 comes in, our trading psychology 7-hour course, all about how to think like a trader and win like a trader and be able to get in and out of stocks when you need to. And not only that, I lost about $3,000 initially on both those trades before I actually came for the comeback. So unfortunately, I started out on both these stocks at the exact wrong time, but I had to keep a cool, calm, and collect head to actually come out on top. So let's get into the nitty gritty and talk about MICT and what happened here. First, this stock had an order, a contract for $4.3 million, so that was the news. There's always some sort of news catalyst when we look at stocks moving pre-market or gappers. So we're always looking for the most active stocks to trade because that's where the money's going to be and the opportunities are going to lie in the market open. So MICT, both me and Mike actually took this thing short about 123. You know, when you see stocks get over a whole number, especially on a big spike, my usually typical range I like to get in is towards the upper range of 30 cents. And I was hoping we just saw a big spike to the upside right at the open, and we would crack the VWAP and then crack the 13 EMA and get a nice push to the downside. And that's where we would really lock in our gains. Unfortunately, this thing hit the 13 EMA, which typically acts as a support level, and also in addition to that, it formed up a pattern that we teach in our longing strategy. So this almost looked like a potential breakout here. So I actually did cover once this popped back above the VWAP, took my first loss here, and I was hoping to see a double top here. You can see the actual closing candles were just failing to get over this high. I was hoping to see a 13 EMA and VWAP breakdown here. So I got short again right here and then stopped out when this actually triggered what we call an F1 breakout, which is basically just an opening range breakout on a 1-minute intraday scale. So I stopped out. But, okay, at this point I had lost $1,000. I'm like, mother effer, you know, this sucks. But you know, there is still opportunities there, and it sucks to start out the day in the red. But if you continue to identify patterns and understand the logic behind the trades, you can make that money back and then some. It can always be risky because if you start the day down on the losing side, your mental capital is diminished, your stop loss and trading capital is diminished. So you have to be very careful when you're trying to make the comeback trades, because that's when you can get yourself into some really sticky situations. If you try to make the comeback and it just gets into a bigger loss. So you do have to have limits and understand risk management when you go into that. But it did form up another pattern, which we call an FU breakdown, which is essentially a failed breakout to the upside. In addition to that, guys, the 200-day moving average, which typically acts as a pretty heavy resistance level, especially on a small stock like this thing's a piece of crap. You can see previously leading into this spike, this is no volume whatsoever. Nobody cares about this stock, okay, because there's nothing going on with it. It just had one little contract that came out. Obviously, it's kind of fluffed up news, so big deal. It's not a major company like all of a sudden making a turnaround ready to, you know, go through the roof. But it did hit this resistance area. So this was kind of, you know, when I was going in on this first initial time, I was like, all right, we're up at the 200-day. This is probably going to peak out and come back down. So I did go back in 10,000 shares on this breakdown again. Once it failed to hold these initial highs of the open at about 128, I got long 10,000. MICT, I actually added again here at it again here on the retest of the VWAP, took half profit, and then where did this go? This thing continued to grind it down, and I locked in the rest of it. And as you can see, ended up making $1,800 on MICT going short after getting stopped out twice. So this is another thing that you guys need to realize as far as risk management. You know, a lot of people are like, oh, how do you win, or how do you make money if you're not winning all the time? Okay, my win to loss ratio is literally only 50%. My win to loss ratio on this day was only 33%. So I lost 66% of the time on this day, and I came out on top, $1,800. Okay, so it doesn't matter what your win to loss ratio is, as long as you keep your losses small and you allow your winners to actually run and make money on the longs or the profit side. You can lose 66% of the time and still come out on top, $1,800 for the win on this trade. So that's really something that a lot of people don't really understand and don't get, is like, oh man, if you're losing 66% of the time, obviously you're not making money. But look at me, I just made $1,800 on that trade, even though I lost twice on it before I ever made money the first time. So that's another thing that you're going to learn in our training, is proper risk management. And the most important aspect of this thing, guys, was that I kept a calm, cool, and collect head. Okay, I identified the actual pattern. I tried to get in for those first ones. It didn't work out. I took small losses. But then the second pattern, or the third pattern, came into play. I kept the cool head and I got in the trade. I executed it and came out on top. So that's basically what happened on MICT. And look at this thing down again today, 17%. If I would have swung trode, is that a word? Swing traded this stock all the way down, I'd be up huge right now. So this was an amazing trade, perfect setup, what we call an FU breakdown right out of Fous Part 3. I utilized, my mental state that I teach you guys in Cloud 9 to keep it calm, cool, and collect head and come out on top with only a 33% winning ratio. So it's all one full circle, guys. The majority of trading is all mental. The rest is just understanding and identifying patterns. But that's it, guys. Fous for trading.